If you trade using Martingale strategy, then 99.9% your account looks like this, which is beautiful, right? But boy oh boy, that 0.1%, oof. In today's video, we will analyze the Martingale strategy in detail from mathematical point of view, and you will find out why almost all traders, including me, myself, and I, use it incorrectly, how to achieve a 99% win rate and not lose everything in a series of failures, and also we will calculate the optimal number of Martingale steps, and I will show you my personal improved version of this strategy. And most importantly, of course, you will get an answer to the question of whether you should use Martingale or not. Spoiler alert, the answer is going to be completely different for each trader. Alrighty, let's start with basics. And in general, Martingale originally came to us from gambling, and it was used as a method of betting on roulette. The principle is really simple. In European roulette, there are only 36 points on the field, half black, half red. So if we're gonna guess where the ball is gonna land randomly, black or red, 50% chance we're gonna get it right. But of course, if it was that easy, the casino wouldn't get any money out of us. So they added additional place zero. So if the ball lands there, red and black are losing the money. So the probability of the ball landing on the red is not going to be 50, it's going to be a bit less. So in European roulette, it's going to be 48.6%. And Martingale strategy actually works with this probability of winning, basically giving you the ability to increase your chances for winning. Let me explain how. So if you bet $10, for example, on red, and if you're gonna win, the casino is gonna pay you $10, and that's gonna be your profit, $10. But imagine that you lost your first bet. You can use Martingale strategy and double the deal. So the second one is going to be $20 again on red. What's going to happen if you win? The casino is going to pay you $20, and you need to remember that you need to account for those $10 that you lost on the first bet. So your profit is still going to be $10. And imagine that you lost the second bet. What you're gonna do, you're gonna open the third one for $40, again doubling the deal. And it's the same conditions. If you win, you're gonna get $40 profit from this specific bet, but you need to remember about $30 from first and second step. So your profit is still gonna be $10, no matter at what point. At the end of the day, you're gonna get $10 of profit. And basically, this is the principle of Martingale, is that you need to not kind of choose at what specific moment you're gonna win. It doesn't matter what spin it's going to be. You need to know and be sure that in next 10 spins, at least once, the ball is gonna land on red. Why do we need that? I think it's really easy to understand, because with each new bet, each new try, the probability of you winning at least once out of all the spins landing red, probability is never gonna be equal 100%, but it's still growing. So the first one, probability of winning is 48%. The second time, once out of 2 times, ball landing on red is 73%. 1 out of 7, it's 99.05. So if you're gonna get 10 tries with the probability of 99.87%, at least one of those tries, the ball is gonna land red and you're gonna win. But this method also has its drawbacks, because each time when you lose, you need to double the deal. That means that the amount of money that you use is getting higher really freaking fast, and the attempt number 10 is gonna be $5,120 for one spin, and that's madness. This madness, oh my god. But that means for you to get 99.87% probability of winning, your starting capital should be $10,230. Let's say you got perfect conditions. You have $10,200 and you found a roulette table with a minimum bet of $10 and the maximum of $5,120, which is completely unrealistic, of course, but still, let's imagine that. Just imagine. So now, with 99.87% chance of winning, you should become a profitable roulette player anyway, right?
Right?
But nah, you're not gonna be a profitable player. Let me explain why. So imagine if you have enough spins, for example, you're gonna go through all of this Martingale cycle 10,000 times, your probability of winning is gonna be 99.8 87%, and that means that you're gonna win 9,987 times and lose only 13 times. But do you really think it's enough to be profitable? No, it's not, because you are going to win $10 each time, so it's $99,871, and 13 times you're gonna lose $10,000, so it is still gonna be not profitable. At the end, we get a situation where we win much more often than we lose, but nevertheless we constantly lose money in the long run. And in fact, if your goal is to increase the chances of winning in one day and you're willing to risk a large amount of money, then yes, this strategy has a place to be for you, since with the probability of 99.87% you will leave with the money. But don't forget about those 0.13%, because if that happens, you are fricked. Oh my god! Final conclusion: it is mathematically impossible to be a profitable player in a roulette. So Martingale can help in a particular game, but it doesn't save you from losses in the long run. But everything is completely different with trading. Here we need to understand the two main concepts that distinguish trading from roulette. Firstly, it is payout indicator. While in roulette we always get 100% payout when we win, in binary option trading the payout varies from 60 to 95%. And also secondly, don't forget about win rate, or percentage of winning trades. In binary options we do not care how much price rises or falls, we always get fixed payout that we know in advance. So by opening an infinite amount of transactions at random, our win rate will be exactly 50%. And that means that if we got 100% payout from each trade, opening an infinite number of deals at random, we will remain at 0. But of course, brokers are not fools either. There is no such thing as 100% payout, because this difference is exactly what broker earns, and that means that with 85% payout, the remaining 15% act as a 0 on the roulette board, guaranteeing the broker's earnings. All right, let's simulate a situation. So imagine you're gonna open 10,000 deals for $10 each of them, and the payout is going to be around 85%, of course, because some of them are going to be 79%, some of them are going to be 91%, but the middle ground is going to be 85%, which is, speaking of that, this is the golden middle. You should always stay somewhere at payout rate that you work with around 85%, because if you are going to always open deals with currency pairs with low payout, your risk to profit ratio is going to be shit. Anywho, let's imagine your payout is 85% and your win rate is 50%, so you are guessing. Half of them are lost, half of them are won, just opening them at random, no strategy, no nothing, just random. And in this case, you're gonna win 5,000 deals, 5,000 deals lost, and from those that you won 10 multiplied by 85%, it's gonna be 42,500 and lost 50,000. So with the win rate of 50%, just guessing, you are gonna lose $7,500, and you are gonna be profitable around 53%. You're still losing money, and the minimum win rate percentage that you need to have to be profitable in binary options is 55%. And at this moment you are going out of break even and you are getting the money finally. But you need to understand that with classical strategy, with classical risk management, you definitely still need to have 55% win rate. You always should be right a bit more than you're wrong, or you are going to lose money almost at every deal. Now let's see if Martingale is gonna help you change it at least a little bit and help you get more money with 55% win rate. So first things first that you need to understand is that if you can see right here, I'm multiplying each next number, not on 2. So if first one is 10, next one would be 20, like with the casino with 100% payout, we multiply by 2. But because the payout here is less than 100%, that means that the amount that we are multiplying should be bigger. So with 85% payout, each next deal should be multiplied not by 2, but by 2.1764759. And only in this case, you are going to get this mathematical correct thing. So that means that no matter which deal is going to be closed in black, you're still going to get $8.50 in profit. If you think that doesn't really matter, it really matters, because in the case of casino, the total risk would be $10,230 with payout of 100%. With 85% payout, our total risk is going to be much higher, much higher, $20,265 you will need to open 10 deals with Martingale on binary options. With correct Martingale, multiply not by 2, but by this 2 point something. But okay, let's imagine you have that $20,000. It's still not going to be like in the casino. In binary options, no one's going to limit you on maximum amount of money. So almost all the brokers are going to accept the deal for almost $11,000. So the question here is only to have $20,000. Not that amount of money that you want to risk. So let's see what kind of probability you're gonna get at the end. So you are a beginner, you know nothing about trading, you're just guessing. So the win rate is 50%, as we know. In this case, we are gonna get, with probability of winning 99.9%, you are going to win. But I mean, how can you be losing with 99.9% probability of winning? How can that be? You're winning almost like, how could I say that? Almost every single day. So basically that means that it's almost impossible to lose. But let's look at mathematical point of view, if that is going to be profitable. And this is the answer. You will win 9,990 cycles of Martingale, and you're gonna lose only 10 of them. But the amount of money that you're gonna lose is gonna be much higher than winning, and you're gonna lose this amount of money. I'm not even gonna say it out loud. That's a lot of money, and you cannot change it with a win rate of 50%. You are gonna lose the money, and that happens because the main agenda that helps you to get the money is your win rate, as I said multiple times. So if you change it to 54% win rate, you're gonna get like less money that you lose, but still, same with the classical strategy. For you to get the money, you still need 55% win rate. Oh my God, how many times I have to say that? Only in that case, you're gonna get the profit of 15,000. In the end, we get about the same picture as it was in roulette. With a win rate below 55%, the Martingale makes sense only from the point of view that within a particular day, you're likely to come out in black. But at the same point, if a loss occurs, then you will lose more than you earned. So, answering the question of whether it's worth using Martingale with win rate below 55%, I'll say heck to the nah, it's not worth it. If you don't have the skills to beat off broker's margin, then Martingale will simply create an illusion of profitability and then slam your face into reality with all its might. And that is why I always say that beginners first need to reach mathematical break-even point and exceed 55% win rate. And only then think about Martingale and other tricks, because without this, you will never earn in the long run. I'm so sorry, but self-promotion is just a must right here. So if you are a beginner who's heading for profitability and you want to speed up this process, you can use my Trading Academy in Telegram. Just simply text me, I want to study, and in addition to the course with exclusive lessons, you will receive constant support from me and your supervisor. And additionally, of course, don't forget about access to the student chat where hundreds of you guys, like-minded people, share your successes and achieve results together. So, the link to my Telegram is gonna be, as always, in the description box down below. Alright, we talked about the basics. Let's talk about how we use it in reality. Because is it optimal to open 10 deals risking $20,000? I don't think so. If you have that money, you do you, boo, but I don't think it's a good idea, because let me explain. The amount of money that you are investing is growing, and closer we get to the next step, the bigger the amount of money that you need to use, right? But if you look at the probability of winning, the main growth of your probability happens at the beginning. So if the first one is 55%, second deal 79%, there is a huge difference, right? But globally, step number 9 and 10, the difference in probability is just 0.5%. 0.05%. So it's not that much, right? But the amount of money is changing drastically. $5,000, crazy. So there is probably optimal point where the risk profit ratio is at least balanced. So the answer is going to be yes and no. From mathematical point of view, it doesn't really change that much, but from the point of view of daily trading, there is a huge difference. Also, you really need to understand that total risk is the amount of money that we need on your balance at the beginning. And starting your trading experience from $20,000 is quite impossible. And you are getting $8.50 from each deal. That's not good. That's not a good idea.
Brother,
So we need to find a balance. And in my understanding, there are two ways to do that. Way number one, one of the most popular ones. So 3-step of Martingale. The main step is like a 0 martingale that we bet $10, then we bet $21, and then $47 on the third step. And we are somewhere right here of probability of winning. And the trade amount is still quite low, right? So it's going to be 47 plus 21 plus $10. You're gonna see it on the screen. I'm not good at counting. So the probability of winning is gonna be 90%, which is great. But in my opinion, my humble opinion, there is no correct answer. Because from mathematical point of view, it's all gonna be the same. But my personal preference when we are trading fast and aggressive, I choose 5 steps Martingale. So the main step plus 4 Martingale steps. Of course, we need much more money with that. But at the same time, we have the biggest growth of probability of winnings. From 55%, we're jumping to 98% of probability of winning. So the main growth of probability, we are taking it all. And the amount of money that we are using is not that huge, not freaking $20,000. Still a lot of money, but still not that much. So 10, 21, 47, 103, 224, you see it on the screen. That's how much money you need for those 5 steps. That means that my martingale table would look something like that. So we have 5 steps. The first one is 0 martingale. Second one is double martingale, right? And so on and so forth. Totally, risk is going to be $400 to earn $8.50. I know it looks like shit. I'm not blind, but let me explain. We have 98% of winning, probability of winning. So from mathematical point of view, this makes sense. Yes, I am risking $400 to earn $8.50, but with win rate 55% and higher, this movement mathematically makes sense, and you will understand why it makes more sense than working without martingale. Let's see that we have this really important thing, which is called PPT, profit per trade. Let's look at what kind of profit per trade we're going to have if we are trading with no martingale strategy, simple trading, right? So we're going to open 10,000 trades and the win rate is going to be 55%, payout 85%. We're going to get the profit of $1,750. So profit per trade is going to be our profit divided by the amount of trades that we opened to get that profit. And it's going to be generally each deal, good and bad, lost and won, is going to be 18 cents for us. And the fact itself of opening a deal getting us 18 cents. Now let's look at how it's going to work with martingale. Oh, that's hard to explain sometimes. So here we have 10,000 attempts, but you need to understand that attempts are not equal deals. With 10,000 deals, some attempt was closed from the first step, but some of them were closed from the 5th step, right? Some of them were completely lost. So the amount of deals was not $10,000, but let's imagine that somewhere in the middle with 90% chance of probability of winning, you closed your martingale from the 3rd step. So that means 33 deals to close each martingale, and that means that total trades are going to be 30,000 attempts here, right? Total trades, 30,000. And now we also need to understand that the PPT changed here as well, because now with 30, no, we start with profit. We take the profit and we divide it with total trades, and the amount of money that we get from each trade is going to be higher than if you would not lose Martingale, right? So that means from the point of view of profitability, there is not big of a difference, but there is a huge difference in terms of time and effort. You earn more in like shorter period of time or same period of time, right? So it's more effective. So getting positive win rate positive is higher than 55%, 55 and higher, not 50%, don't forget. So Martingale makes more sense in economical point of view. Generally, the higher your win rate, the more sense Martingale makes. For example, with win rate of 70%, we are gonna get the probability of closing at least one deal out of 5 steps of Martingale is gonna be 99.76%. So that means we're gonna win 9,976. We're gonna lose 24. The profit is gonna be great, and each cycle is gonna be 2 deals because, generally speaking, with 91% probability of winning, you are gonna close the deal in black. So generally speaking, this is going to be the second step of Martingale, cycle closed, and your trades in cycle are lower and profit per trade is getting higher, so it's going to be $3.75. And with typical trading with a 70% win rate with no Martingale, we're going to get $2.95 per trade. So generally, the higher win rate, the more sense Martingale makes. So, does this mean that Martingale is a great strategy and with a win rate above 55%, you urgently need to start using it? Not really, you know. From a mathematical point of view, yes, it is, but only if you can trade like a robot without any emotions. Let's get realistic for a second here. Imagine if under ideal conditions, your win rate is 70%. Think about it. Will it really remain this way after a series of 4 losses with constant increase in transaction amount? Because my answer is gonna be here to no. Imagine you had $406 on your balance, but only $224 remained. And you will either bid it all and make a profit, which is great for you, happy for you, honey, or you will have a huge loss. So with all this pressure, I guarantee that simply due to psychological aspect, your win rate will definitely decrease and the chances of your last trade will no longer be 70%. It would rather be close to 50. So basically, in my opinion and my understanding, the most correct option is to take 2 or 3 steps of Martingale max, because in case of failure, you will have a small loss, but at the same time, this does not put so much pressure on you mentally, you know? You don't need to have like a huge startup capital, and from mathematical point of view, this is still profitable solution. So ideal Martingale, in my eyes, is gonna look something like this. Total risk is gonna be $79, potential profit $61,000 for 10,000 cycles, and PPT is going to be $3, which is good. And I think this is the best choice with psychological aspect included. And the capital that you start with is going to be somewhere around, you should do it like 3 times at least. Not 3 times, but you can lose 3 times. So this is going to be the capital that you start with, $237. And I think this is the best way and the best choice. And by the way, in the last video, I analyzed the complete opposite of Martingale and showed my smart binary compounding system, which in theory can allow you to earn $25,000 starting from 10. Amazing, watch it. So if Martingale is not crazy enough for you, make sure to watch that video right there. But that's gonna be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.